Here's a report I got from my stockbroker highlighting the whole list of dividend stocks with above 6% dividend yield. But the first question on my mind is, are they sustainable or not? Can you retire just based on these high yield stocks and REITs? So in today's video, I'm going to dive into 3 key things I look out for when it comes to dividend stocks. Remember to watch until the end because I will do a quick analysis on a couple of the stocks as well. Before I get started, if you want a copy of this report, you can head over to patreon.com/investkhaki. Next, click on this join for free blue button and you will find my latest post to download the report. I also share some of my thoughts on the counters I like inside the Patreon post itself. Anyway, coming back to the video, many people tend to look at the surface and assume that high dividend yields are great, but it cannot be further away from the truth. Case in point, Manulife US REIT was offering 16% distribution yield back in February 2023, and many people think that the share price can't go any lower because it has already gone down by 70-80%. But as the idiom says, right, when it rains, it pours. So on top of the constant distribution declines until they can no longer give any more distributions, the property valuations also came down very sharply and the share price reflected that by tanking to just a few cents. In other words, what we are looking for in this video is to check for sanity, right? Apart from a high dividend yield of above 6%, we need to include 3 key things. The first one is a stable business model. The second one is a long history of maintaining or increasing their dividends. And the third is the dividend payout ratio less than 1 times to make sure that it's sustainable. With that, let's head over to our list of dividend stocks. Given that there are 34 stocks in this particular segment, I'm going to have to cherry pick on a few of them that caught my attention. One group is the US and Europe REITs, right? Which are really dishing out super high dividend yields. Out of which I've done research and personally found quite a few investment merits for Keppel Oat REIT, alright, and United Hampshire REIT. And among the other REITs and trusts shown over here, I personally like to hunt for those that are not really covered by analysts, such as Sabana REIT and First REIT. As you can see, these two REITs only have one analyst covering them at the moment. So there is this chance, right, when their share price goes up, more analysts will start to cover them, and then the market sentiment will improve and push up their share prices even more. Okay, so I will be using WebPro to analyze a couple of these stocks, especially OCBC, since it has the highest dividend yield among the 3 banks. But before we do that, I would appreciate it if you can help me to smash the like button and subscribe to my channel so that you can tell the YouTube algorithm to push my video to benefit more people. In return, here's a financial meme for you. Again, to recap, I like to look at whether the dividend stocks have a stable business model, long history of maintaining or increasing their dividends, and commands a dividend payout ratio below 1 times. The first one is OCBC Bank. All right. For their business model, it's needless to say, OCBC is among the top 3 local banks and has a very strong balance sheet. Okay, and definitely recurring income coming in from lending out money to borrowers across Asia itself. Okay, the next one to look at is their dividend per share. All right, so looking at this dividend analysis tool, if we were to take away the earnings per share by this blue color bar, all right, so we can see that their dividend per share has been increasing from 36 cents all the way to 80 cents as of June 2023. Okay, so this is a very healthy pace over the past decade. Next, the third point we want to look at is dividend payout ratio. And from here, okay, this purple color line, you can see that it was 35% in year 2014, which increased slightly to 56% as of 2023. But not to worry because the dividend payout ratio is still below 1 times, which means that, which implies that the dividends are well covered by the earnings. Next up is PropNext, our Singapore largest property agency by the number of employees or number of real estate agents. All right. So although I've chosen the 10 years period, but PropNext is just listed, I think maybe year 2017. So they have their full year in 2018. Okay. And based on this dividend chart over here, you can see that there's this red color bar, all right, which is actually the special dividend per share. And if we were to take it out, okay, maybe because it's a special dividend, we take it out, we can see how the earnings of PropNext has increased substantially in the past 2 to 3 years. But as of trailing 12 months, right, in June 2023, the sales for PropNext has been coming down by a bit, okay, and as a result, you can see that their dividends have also come down in line together with the decrease in the top line. And what this tells me is that when you want to invest, okay, maybe we look at the business model. When you want to invest in dividend growth stocks, it is prudent to look for stocks that have a stable business model where you can have recurring income and it's not cyclical, right? So for PropNext, it's very dependent on how the property market is performing. When it's good times, of course, you will see a sharp increase in the sales as well as the profits, which led to higher dividends, as shown over here. Right, during COVID, actually a lot more people buy properties, so they earn more and they can give out like more than double of the dividends per share. However, due to the recent cooling measures and the high interest rate environment, things are starting to get rough for the property sector, and hence, with the decline in sales, the dividends will also decrease. So this is one thing that dividend investors need to take note of. And finally, we have our third stock on the list is Pan United. Okay, so Pan United is a global leader in the low carbon concrete technologies. Simply put, they come out with this low carbon concrete, which is then being used to build a lot of infrastructure projects or buildings around the world, okay, especially in Singapore. Okay, so you can see they have over 300 concrete solutions, and they are being used in urban structures such as Jewel Changi, Gardens by the Bay, Tuas Megaport, Changi Airport Terminal 3, MRT lines, so on and so forth. Okay, so coming back to Web Pro, we look at the dividend analysis tool again. And in the past 5 years, okay, Pan United, their earnings has been relatively stable and increasing, okay, except the year 2020 during COVID pandemic, okay, where all the construction projects are put to a halt, and no building owners will want concrete solutions from Pan United. Okay, however, they rebounded really sharply, and 2021 is already like back to 2019, and then further on, it sort of like increased gradually from 2.6 cents to 3.6 cents. Okay, so that's a pretty good increase. And for the dividends per share, I would assume that other than the outlier, okay, COVID year, right, where their dividend payout ratio jumped to 5.4 times, they have been quite prudent in the sense that they pay out around 55-60% of their earnings as dividends. So given that Pan United is at the forefront of all these ESG practices, whereby Singapore is wants to be the leading country, all right, to adopt all these low carbon or the kind of renewable energy country, all right, Pan United will be a beneficiary of this trajectory. And with that, right, their sales and their profits will continue to increase, at least in the foreseeable future. This report also covers the SG REITs and the STI 30 blue chip stocks. but I will not be covering them in this video itself. If you want to see what stocks I'm putting on my watch list, you can go check out patreon.com/investkhaki. Once again, you can just click on the join for free button and sign up using your Gmail or Facebook account. That said, which stock has caught your attention or you want me to do a deeper analysis on? Let me know in the comments down below and also help me to smash the like button. Don't forget to subscribe to my channel as well and hit the notification bell for more of such stock analysis and updates. Next up, if you have the time, you can also watch this video where I talk about the property outlook and construction outlook in Singapore. As always, remember to do your own due diligence. Thanks for watching and I'll see you next time. Bye.